Hi, today I'm going to talk about leveraging the tremendous tax benefits of life insurance that are very briefly tax deferred growth inside assets inside the policy and a death benefit that pays net of taxes. I'm going to show you how they can be leveraged into an advanced design strategy called private placement life insurance. The retail marketed policies, which we all are accustomed to, we all see, we all have agents call on us, are based on three things. First, pure protection. The amount of the insurers seek to buy the largest death benefit possible, while also having the tax-deferred growth of the inside assets. That's two. And three, all of that is based on agents' commissions. The agents' commissions based on age and the amount of death benefit. Private placement does the exact opposite. Private placement seeks to buy a minimum of death benefit with high investment growth using the tax-deferred portion of life insurance, and it has no commissions. There's no commissions paid to agents, usually, most cases. Okay, so now moving into retail marketed policies, there is a strategy called variable life. Variable life offers the insured owner a menu of mutual funds they can invest in, along with a death benefit. Private placement life insurance is based on that chassis, but the investment options that are offered are somewhat larger, or can be much larger than mutual funds offered by the insurer in variable life. Now, there are two ways you can buy private placement. There's domestic and there's foreign. Let me show you how domestic works first. Domestic life insurance, there are only a few insurers that will offer it, and the investment options, as mentioned, are somewhat larger than variable life, but they're still limited to what the insurance company is willing to offer you. There is also depending on where the trust is written, and all of this comes out of a trust to save estate taxes. There is also a state premium tax that's levied, depending on where you are, what state it's domiciled. Okay, so the second type of private placement is foreign owned. It's a foreign insurance company that's made an election to be treated as a domestic insurer. Quite interesting. And because of that, the menu and the options to invest can be much larger. Indeed, it's possible for the private placement to invest in assets that are already owned by the insurer. How this works is beyond this initial overview, this preview, but I can show you how that works. All right, so now moving forward, both of these strategies, whether domestic or foreign, will require an investment manager to be separate from the insured. You cannot manage your own assets. In terms of a domestic package, an insurance company will assign an investment manager to you. In foreign, you can suggest to the foreign insurer who's made that domestic election to be taxed as a domestic insurer. You can suggest investment managers to the insurance company. They'll have the final say on that. Now, you can also, in foreign private placement, you can also recommend or suggest several different investment options. That investment manager will then can say yes or no or maybe or just no as a rule. The investment manager must be totally separate, so you are very safe. You can feel very safe. Now, a lot of people they love this, they like it. All of the the tax breaks are just tremendous. And so they go to their lawyer and they say, what do you think of private placement? Well, let me tell you what happens. There was a case several years ago called Weber versus Commissioner. Weber set up a private placement strategy, and he indirectly directed the investment manager through his attorney and through his accountant to invest in certain assets almost on a daily basis. Because of that, IRS stepped in and said, no, this is not going to work. This is all voided out. So what has been the effect of this? Has been an extremely negative effect on all private placement without really understanding why it happened and how it can easily be avoided. So what do you need to be successful in private placement? Well, first and foremost, you need me. You need an insurance producer that understands how to put this all together. Beyond that, you need an estate attorney that has experience in designing and implementing private placement life insurance. With that, and with all this, and I say this in every video, you've got to know what you're doing in all of this. You've got to have a savvy estate attorney who's experienced at this, and you've also got to have an insurance producer like me, because I know how to do this. If you like my videos, and they're very interesting, I have to tell you, I think I've done a nice job with them so far. You can look at them, you can go to them, see them. They're on MorrisJMizrahi.LLC.com. Thank you for listening, and I hope to come back to you with additional videos in the near future. Looking forward to your comments. Thank you. Bye-bye.